HP Incorporation, ticker HPQ, is the stock we're going to be analyzing today because they did release their earnings after hours yesterday. Now, what are some key levels we want to be paying attention to? So to get straight into it, what you can see is obviously we've gapped down over 9% as we're recording this video. And what you can actually see is we have sold off, and the key levels we were paying attention to is obviously we did have the 28.75. And as we continue down, the 27.90. Now, this was actually quite a nice level for me. Intraday did actually get quite a nice day trade on this. Long bias off of this level to play the bounce. Now, we could definitely continue lower. So that I took as a day trade and could definitely look at a swing trade off here as well. But we do have one more level if we do continue down, or actually two more levels. And that's at $27 and $26. So these are two key levels of support. And what we tend to see off these earnings releases is, again, you kind of get that smash down, you get a bit of buying pressure, and then you do one more continuation to the downside. So for the swing bias levels, I'm paying a lot more attention to the $27 and $26 levels to be able to trade those. So we'll see how we continue down today. If we can continue lower, then obviously there's some supports we are paying attention to look at long bias. Now, what are some resistances? So again, if we're long from the 27.90 or below, targets are going to be the 28.75. So again, this would kind of be more of a scalp trade if we take in this, or kind of a short-term day trade to trade 27.90 to 28.75. Now, if we break this, and again, this is going to be more swing bias levels, but if we do continue up, then we do have the 29.90 and $30.50 as those two key resistances on the way up. Now, these can be used in two ways. If you're a reversal trader such as myself, you're probably going to be looking to take these lower levels long bias and look to trade them into these upper targets. On the other hand, if you're a trend trader, you think the earnings are bad, you think we're going to continue to the downside, you're just looking for the entry, then that's where these 29.90s and the $30.50 levels could be quite key, and looking to kind of add into these short and look to trade down to the downside targets. So again, that's going to depend more on if you're a short buy or a trend trader or a reversal trader. The way I'm looking at it is the 27.90 and below long bias and targeting the 28.75, 29.90, and will probably be completely out by the $30.50. You are about to find out the key levels for NIO. So to get straight into it, they did release their earnings yesterday before the open. We obviously saw that gap to the downside and really kind of gave back most of that move. They nearly filled the gap at $11.02. Again, there is still a gap to be filled at that level, so definitely a level to be paying attention to. But what are the key support and resistances from here? So excluding that 11.02, which again is going to be a resistance. If we go to the downside, we have supports at 8.50, we have 6.65, and we also have 5.40. So these are going to be some nice supports to the downside. And really, this is where I would start to be looking at NIO. I only really look to buy if we can be getting it near those kind of 52 or 6 month lows, which again, that 8.50 or the 6.65 will do. And the reason for that is, yes, this stock can run, but buying it, I think when it's on its upside moves, it can kind of give up those gains quite quickly. I mean, this stock can take a while to push to the upside and will kind of grind slowly to the upside, but when it starts to fall, it can fall quickly. And again, that's why I prefer to kind of get it when it's kind of more consolidating and kind of slowly pushing down. We can buy in. Again, we'll buy some puts for protection just so we have defined risk and we don't have to worry about where do we stop out. And then again, look for those upside targets. So again, supports at 8.50, 6.65 and 5.40. From the resistance standpoint then, what are we paying attention to? So again, we got that 11.02. That's a gap fill location from before the earnings. And then if we go higher, we have 11.50. We then have $12, and then quite a big move after there. We have the 13.80 and the 14.60. Now, we do have levels going further off, but considering right now we are at fair value on NIO, I'd much rather see the reaction before we can kind of talk more about the direction it will go. So again, for now, if we start pushing to the downside, these are long bias levels. And if we start hitting these upper resistances, normally we would look at these as short bias levels. So once we come into these levels, again, we're at fair value. So we should see a reaction coming into these levels. And if we get more of an extreme move, then we can make an updated level with those third deviations. You are about to find out the key levels for Boeing, ticker BA. So to get straight into it, this stock has been hitting between these deviations and really playing the reversals quite nice. We'll go over the key levels. And again, if you want your own stock analyzed, like the comment below. If you recommend a stock, we will most likely analyze it. Now though, so the support side, if we start to push to the downside, you can see $212.50 was a key support. That's also where we came down recently. Tested that as a support and then started to push off of that level. But if we break lower, we're then looking at $208 and $200 as key support. So again, they're going to be the three top supports we're paying attention to if this stock starts to pull down. Again, right now we're sitting at around $230, so it requires a bit of a pullback to start coming into these key levels. But what is closer, that's going to be our resistance level. So if we start pushing to the upside, we do have a key resistance at $236.50. This is our first deviation on the 6 month, and was also this kind of key area level that we created back here. A bit of consolidation before getting that overall strong reversal back to fair value. Also at this level, again, you do have that gap fill basically at this $236.50 as well from this move here, which then did that continuation move to the downside. So kind of two key resistances there that we could potentially start to look at a bit more short bias. But if we do continue even further, we have two more levels to be paying attention to. And if we can break this 52-week high of around $243, we're looking at $248.50. And if we have a further push, we are then looking at $260. So again, just to recap everything from the support side, where we would normally look to take this stock long bias is going to be $212.50, $208, and $200. And resistances normally again where we're looking to play the reversal to the downside, so looking to short the stock, and that's going to be around $236.50, $248.50, and $260 as those key upside resistances. CHWY, ticker CHWY, is down 12% today. So what are the key levels we want to be paying attention to? So again, this is off earnings, and what was actually quite surprising with this move is, you can see we've had this massive sell-off recently, and what you saw on this stock was it was below its fair value. Its fair value is close to around $31. Normally when you see a stock trading below this value, you'll tend to see the earnings be a bit more bullish, but again, in this case, had a strong sell-off, which is not something we see every day. So it does definitely show the weakness in this company as of right now. But what are key levels, both support and resistances, we want to be paying attention to? So to quickly cover the resistances, because we do have two, it's going to be the $25.50 and the $29. Again, these are both our first deviations from both the 6 month and the 1 year to be paying attention to. Can be strong levels. Also as well, you do have that gap for around $27.50 that we could definitely be paying attention to as well. So again, they're going to be the key three resistances. So if you're a long bias trader, these can be targets, or if you want to wait for the stock to have a bit of a balance and trade the downtrend, then again, those could definitely be entries to be paying attention to. Now, what are other key levels to be paying attention to? So we do have 24.20. This will kind of be a support / resistance depending which way we go, because right now we're basically hovering around this level. So again, we need to see a bit more of a reaction before we can turn that into a support or resistance, but a level to be paying attention to nevertheless. If we push to the upside, that will turn into a support. If we get a strong push to the downside, that will turn into a resistance. So again, definitely paying attention to that 24.20. Now, if we get a further move to the downside, what are key supports? We have $20.25, and really a really nice level to trade would be this 19.30, because again, the blue lines are our second deviations. This green line is our third deviation, and third deviation between 99.7% of data should trade above that level. So if we do start coming down to that kind of low, definitely something I'm looking at trading long bias myself. And again, we'll be targeting 24.20, 25.50 will kind of be my key resistances I would be targeting off a long on these lows. Dollar General, ticker DG, is down 17% today off their earnings release. And again, you're going to see some sympathy move over on Dollar Tree General if you have also been paying attention to that stock. But what are the key levels we want to be paying attention to on Dollar General? So as of right now, again, we've had this earnings move. We've now created obviously a big gap in that location, and we've traded down to around $130. What is at $131? That's our first deviation on the 6 month, so can be used as a support. But normally on the day of earnings, I don't like to trade the levels. We'll be waiting until at least Friday to start entering off technical levels of a fundamental release. But overall though, we do have a support at 131. So again, if we're kind of seeing it hold this level coming into tomorrow, could definitely be looking at long bias, and our target would always be that gap fill at 157.60. But to cover more supports if we do continue to push down, which again can be very likely off a negative earnings release, we have a 116 and $98.50 support. Again, the 116 I think would be quite nice. We could see a move coming into here Friday or coming into next week. These could definitely be some nice longs. And again, depending how you start seeing Dollar Tree hold up as well, you might be able to see if there's strength in Dollar Tree. You'll probably see a bit of strength come into Dollar General as well. So again, be watching Dollar Tree General. That's going to be ticker DLTR. That could be the leading indicator depending on how DG moves. So again, 116 support, 98.50, and if we had an extreme move, we also have another support at $85.50. So again, those are the kind of three supports we're paying attention to, and this 131, which depending on where we move, that could be a support or resistance as we continue to move. Now, to cover the resistances, what are targets and all of those? So again, obviously we have the gap fill at 157.60. It's definitely a resistance I would be paying attention to if we are taking any longs from here or the kind of that 131 or below. That would be definitely a nice area to be taken in profits. But if we did break that and we want to hold it further, we're then looking at a $180 resistance, which would be our first deviation on the 6 month. But not only that, it kind of takes us into this gap fill location. Again, the actual gap is closer to around 205 or kind of 202. But again, as you start coming into this area, that could definitely start seeing some selling pressure. So that 180 lines up quite nice with that area that was created on their previous earnings. So again, we need to see more how this reacts on this earnings release. Again, supports 116, 98, and 85. Resistance is 157, 180. And again, just watching how we react around this 131, whether that turns into a key support or resistance. Salesforce, ticker CRM, have their earnings coming out after hours today for Wednesday. So what are some key levels to be paying attention to? So right now we are sitting at or relatively near fair value. So currently we're sitting at $213 and fair value is between $224 and $234. So again, relatively close to that fair value. So we may not see a monster move off a release like this, but we will overall cover the key levels. So if we go to the downside, we have a support that we've kind of already been holding for the last few days, and that's at the 205.50. So again, if we kind of get a lackluster move off this earnings, that could definitely be a key support to be paying attention to. However, if we get a bit more of a reaction, we have 194.25 as another support on the way down. Now we do have one final support to be paying attention to, and this would only be if we get quite a big and a kind of overreaction off this earnings, and that would be a support at 177. So again, the three supports we're paying attention to is going to be the 205, the 194, and the 177 as key supports. Now again, if we go to the upside, we have this range dotted out. Again, this is a fair value range between the 224 and the 234. So where we actually start coming into some short bias levels. Again, if we're short bias, areas that we look to short. If we're a long bias trader, these are normally going to be used as targets. And that's going to take us to the 254, 263. And if we get an extreme move, or actually we didn't even note any levels higher, but if we did get an extreme move, we do actually have levels at 291. But again, the reason we haven't noted as many levels to the upside is, again, if we're at 213, to be able to even hit our first deviation, we need a 20% move, which is quite strong. Whereas if we go to the downside, our closest level is 3%, then we have 8%, and our extreme move would be 16%. So again, these supports are kind of, it's going to most likely be a stop we can trade. If we push to the downside, we'll probably come into supports we can trade it. If it's one where we actually push up off the earnings, will probably be something I don't trade, just because I don't think we'll be making a big enough move to actually push to 254, because again, we would need a 20% move to kind of make any kind of key levels which are worth our while to trade. So again, my main focus then is going to be on the supports of 205, 194 and 177. You are about to find out the key levels for ticker MEDS. So to get straight into it, we have had quite a big move today. We're up 42% as we're recording this video. Now, what are the key things I'm paying attention to? So firstly, we have kind of where we get a bit of a hesitation. It's kind of around this 1180. That's a 3-month anchored VWAP. But paying attention to more the deviational levels, we have 1115, which right now is kind of more of a support, normally a resistance. Normally we don't like to trade these because you also have that level at $9 as well, which again, if we push to the downside, could be used as a support. But especially on more volatile stocks like this, we tend to stay away from these first deviations and instead focus on the second or above. So what this means is we have our key levels at 1325 and 1375, which definitely held up quite well today. You can see obviously on the open, opened up around this level, and then we got that strong sell-off down to its target of 1115. So there was a relatively nice move. But if we get a second wave of upside momentum, what else are we looking at? So again, these are still resistances to be paying attention to, but are never going to be as strong on that second hit. So we could look at them as short buys, but again, definitely would be using less size, or just definitely holding protection. Means obviously we're shorting the shares, we can hold some calls to protect that risk. But what are going to be the key levels, and ideally the main ones that I would be looking to trade, is going to be $16.30 and $17.50. Now, if you're long bias, these could definitely be targets, but again, obviously you're going to have that strong resistance at $13. But if you're holding it through, those could definitely be some targets. But for traders like me, who are more reversal traders, short at $16.30 and $17.50 is going to be my main trade opportunity. Looking to short these, trading down to the targets of $13. And if we can hold through there, $11 and a final target at $9. $9 would kind of be that absolute final target I would hold short buys to. I don't even think I would hold it that long because it's just too big of a move. But if we did, obviously that would kind of be our final target, because then we're coming in to basically fair value if we drop any lower. So again, on a stock like this, to me, how I trade, I much prefer to short these sort of stocks. I don't really like trying to capture the momentum because I think the downside risk is usually just as great as the upside. Whereas on these kind of stocks, if they pop to the upside, we can short them at the key levels, get some protection. So if it goes against us, obviously we have defined risk, but as it starts to pull back, which happens 9 times out of 10, that's when we can be in the money and make money on stocks like this.